Record the cloud. Let's get it started. Welcome to the weekend watch list. Ideas for the coming week. Let's jump straight into it if we can. All right. The first thing, we always go over the top 5. Let's take a look at SPY. Last week, right, SPY had reached highs at 470. So we was either looking for SPY to continue up or reverse to the downside, right? If you look at this weekly, we got a 2 up on the week and it took out the highs, but it failed and came back inside, right? So this is, since it ended as a doji, all that tells me that right now is that there's indecision on whether this wants to keep going or reverse to the downside. But I know for a fact that this 1-2 leaves me with a potential setup, right? For continuation or for reversal based off the strategy that we use to pick stocks, right? If we look at the monthly, we got a 3 up, 2 up, right? We typically don't play the 3s and the 2s, especially when we start with a 3. We normally wait until the second candle after this 3 to give us direction, right? So that takes us, if we're looking at the monthly time frame, this is telling us, hey, we're not going to get direction until the next month, considering we still have time in this month. So looking at SPY right now with the way that it's moving, the way it's consolidating at this price range, and sticking at this price range, right? I have more of an inclination that this is going to go to the downside just because of the setups that I see, right? And I'm basing it strictly off, strat patterns, right? If we look at the monthly, we have a 3 up, 2 up. Well, I know we either get 2 up continuation or 2 down on the month, right? So we either see a 3, 2 up, 2 failed, or we see a 3, 2 up, 2 up, right? I see more of this 2 down happening on the month. We go to the weekly, we have a 1, 2 up failed. Let's look at the strat. 1, 2 up failed. A likely pattern is 2 down, right? I see that happening more so on this weekly time frame. We go to the daily time frame. We have a 3 up, 2 up failed. Well, that kind of looks like almost a month, right? 3, 2 up failed. What's the next most likely? 2 down. So just looking at the patterns alone, and the setups that we see on the daily, the weekly, and the monthly, it puts me in a bearish mindset. So that doesn't mean I'm going to take puts. That means I'm going to look for puts and I'm going to wait for those puts to trigger if they trigger, right? So on the weekly, so when you're looking at the week, you want to look at contracts that are a week to 2 weeks out, right? To give you time. You want to use your weekly more for your swing trades, right? So if we go 2 down next week and we complete the 1, 2 up, 2 down pattern, we would look for puts below 466.23, with our first target being 462.04. If we continue up, that happens above 470.94, and then you can look for your next target to be near psychological levels for SPY. If you scroll down to the daily, right, and you were looking for intraday trades, right? So basically day trade, scalps potentially. We have a bear setup on a day with this 3, 2 up failed. If we go 2 down, that happens at 468.50. Look, and then you'll see clearly our first target is our trigger for the week. If we hit that target and we keep going, we've triggered puts on the week, right? Our next target is all the way down at 462. And then that also will make a double top on SPY, right? So top out once, top out twice, fall to the bottom. That'll be more confirmation. If we break this 462, that'll be confirmation of a double top rejection, and you can look for price to go lower afterwards. But SPY's been moving beautifully over the last few weeks, just running up into the highs. I would say for the past few days with this indecision, it's been really rough trying to trade SPY because it bounces it bounces aggressively, especially in the morning. It'll start off in one direction, reverse to another. About 12 to 1 o'clock, it'll reverse back to the top. So it's been difficult to swing SPY, but it's been really great for those momentum scalps, right? People who've been scalping SPY on those reversals. But I like more consistent moves versus scalping. So I like swing trades better. But that's just a personal preference. Let's go to QQQ. I really gotta do something. So we look at QQQ on the month, and it's just knocking out targets, right? We got a 3 up, 2 up with QQQ this past month, not reaching 405, right? That's pretty high. That's extremely high. So just like with SPY, right? We're either looking for continuation or a reversal back down to the downside. All right, so the difference between QQQ and SPY right now, I mean, it's kind of clear to see. Wait 1 second. Remove drawing. Look at QQQ. SPY also had to set up this 2-1, 2 up, right? But SPY failed. QQQ didn't. QQQ is setting up for continuation to the upside because it didn't reject the highs, right? But if we look over the past week, remember we were initially looking for calls above 399.62 when we were talking about QQQ last Saturday, right? If you were able to catch this, to catch calls, you made money beautifully by following this simple setup, this 2-1, 2 up continuation. Entry being 399, first target being 400, which you, and after it breaks 400, next level, psychological level, 405, hit that perfectly, right? It's crazy how these things line up based off these simple rules, because this is one of the things that we talked about. We talked about this. We talked about these psychological level rejection. We talk about these breaks over ones, these breaks over highs, right? If we scroll down to the daily, right, you can see that 2-1-2 a lot clearer, right? And you can see the reversal. You had a 2-1-2 reversal down, right? Then you had a 2-1-3 reversal to the upside, giving you this overall, this 2-1-2 up, right? When QQQ reversed right here, 2-1-3, your entry really could have been, this is, well, let's go last week, 1, 2, 3, 4, 5. So really here, once you got this 2-1-3, 3-2, 2 up continuation, it was to the moon with QQQ. And there was earlier entries in 399, but 399 was a safe entry based off the week, right? Because that's the time frame that we was looking at. Beautiful, 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 beautiful trade. But now, with it again reaching all-time highs, right? The question is, do we reverse? Do we keep going? What changes, or what are the possibilities? What can we look for? So with QQQ, if you was looking at the daily, you want to intraday trade, right? You would take puts below 402.58, with your first target being 397.45. But if you wanted to be safe, right, come down to the weekly, you're looking for something a little bit more long-term, a little bit further out. You wouldn't take calls until above 405.30, with your first target being, next psychological level, so 410, and puts below 392.10 on QQQ. Let's go to Dow Jones. Dow Jones, last week, we were looking for calls above that 396.94 level, or puts below 359.58. We triggered the puts this past week, right? We triggered the puts clearly with this 2 up, failed, 2 down rejection, and we knocked out our first target at 357. So this was another beautiful setup that we talked about and we planned for, and could have been extremely profitable, right? All we had to do is wait for the trigger, and we got that. So now we're moving forward. We're like, what could this do? Could this reverse? Could this bounce? Could this continue? We have more time frames pointing towards the downside. We have more red time frames than anything else. So we have full time frame continuity to the downside. We're not going to go against the trend. We're going to wait for triggers to tell us what to do, right? So if we come to this weekly, we would only take calls once it's reversed back above the high. So above 363.54 for calls, below 355.38 for puts on Dow Jones, and it's reversing off the top. So, and with more time frames being to the downside than to the upside, I'm kind of excited to see if we break below this support level and fall to our lower support down here at 350.39 with Dow Jones. Let's go to IWM. IWM had a breakout recently, right? And this was another breakout that we planned for, we watched for 3 weeks ago. And it happened with this 2 up outside of this sex box. But if you look, once IWM reached a high of 244, it failed. It went 2 up, failed, right? And then this past week, it went 2 down. So this 2 up, failed, 2 down. This is a bearish reversal. This is saying price is reversing to the downside, right? So watch for price to either continue or reverse, but with more time frames being red than green, there's a likelihood that this could continue to the downside, right? And what I mean by more time frames to the downside is the 4 hour is red, downside. The daily, red, downside. The weekly is purple, but it's 2 down, so it's red to the downside. And the monthly, 2 up, failed. That means it failed at the highs and now it's reversing to the lows. So do we continue? Do we fall back inside of this sex box? And I know I've mentioned this before, but once price action falls back into sex boxes, it usually falls out on the other end, you know? So with IWM, watch for puts below 232.39. First target being 228.89, second target 223.50, and watch for reversals above 240.76. Next target being 244.46, but with the more time frames to the downside, kind of looking to see if this continues down. So that covers the big 4. Let's jump into the watch list and see what's going on. If I can get this up. So first on the watch list, we have CCL. And I'm looking for calls above $20.90 or puts below $19.86. I found this using my 1-2 down week scanner. So since it's a weekly time frame, I'm looking at this more for a swing than I am a day trade. And here's what I saw on CCL. If you've been watching, which I know some of you have, the travel sector has been beat the hell up. Look, it's just been sold off on all time frames, right? Sold off weekly. 2, 1, 2 down, sold off. Could have easily caught puts. This was a great setup for puts last week. As soon as it crossed below 22.06, your first target was 21.23. Second target was $20.54. We got all of that and then some last week. But what I'm watching for, specifically here, what I like here, even though we're beat up, right? 2 down, 2 down, 2, 1, 2 down, 2 down, 2 down. Even though we're beat up, we could have a potential bottom, right? We could have a potential bottom. And the reason why I say that is if you go to this daily time frame, I know Tanya said, we have a doji candle at the end of a downtrend, right? We have a 2 down that failed to stay 2 down. So since it failed to stay 2 down, meaning it rejected the bottom, it's a doji at the end of a downtrend, right? And we have 1, 2, 3, 4, 5, 6, 7, 8, 9 pivots down without a new high, right? This is a potential pivot machine gun to the upside. And all that means is with enough momentum, with enough buying power, if price action pushes above this high, $20.90, and then pushes above this 21.65, there could be enough momentum for price action to knock out 4 to 5 of these pivots, creating a new high, right? And knocking out 1, 2, 3, 4, 5 pivots, right? So pivot machine gun is like loading bullets in a gun. You just loading bullets, and once it fires, it shoots off all those bullets, right? So even though this one almost has full time frame continuity to the downside, even though CCL is pointing to the downside, this PMG setup on the daily with price rejection at the lows and this doji at the bottom of a downtrend is a great bull setup. And we would be remiss if we were to miss this run up, right? So that's CCL. Again, calls above $20.90, puts below 1986 if it decides to continue down. Next, FSR. I found this using my 2 down 1 on the day scan. And I like it for a couple reasons. Firstly, I like FSR based on this quarter, right? So we went, all right, go ahead and clear this for y'all. We went 2 up on the quarter, right? We went 2 up here. We knocked out one target right here at $20.61. Our next quarterly target is all the way up here at $31.96. Now that's not saying that we can reach $31.96, but that's saying that that's a potential target. So you can watch for FSR to reach that target, right? That'll be magnitude. We scroll down to the monthly on FSR, and you get a clearer picture, right? We had a 3 down, 2 down that failed and came back up, and then a 2 up. These 3 candles are a bullish reversal, right? This tells me that price action rejected the lows and it's reversing back to the upside. And that was true because the very next month, which was this month, right, we went 2 up. So we had 2 up continuation, knocking out all of these pivots. And look at the monthly. Our next target is where? Our next target is all the way at $31.96. So long term, right? Long term already, quarterly, monthly, this is looking like it wants to reach $31, right? It looks like it wants to push towards that $31. That's long term. We go down to the weekly time frame, and we have 2 up, 2 up, 2 up. It's just been bullish. And then until this weekend, we got a 2 up fail at the top of a bull trend, right? And it's a doji. So this, just like anything else, a doji at the end of a trend could signal a reversal. So since we have this doji at the top, I'm already looking at this like, okay, we could have a potential reversal to the downside. Where do I want to plot my entries? Where do I want to plot my exits? What do I want to watch for? So if we go 2 down this coming week with Fisker, right? Fisker EV, all these EVs are cooling off now from their run up. It's possible that this could be one to do the same. I'm gonna look for a break below the low. So remove this one. So a break below 1931, right? So a break below 1931 to, oh wow, that's a mistake on that. Yeah, break below 1931 to confirm a move down, with the first target being 1826, next target being 1660, right? So let's just scroll to this daily time frame. We'll go to the daily, right? What I like about Fisker even more, right, is this 2-1. We all know 1s are actionable signals. 1s tell us, pay attention, something is about to happen, a move is about to be made. Watch for a break above my low or my high. So right here with FSR, right? This 2-1 setup. It's telling me watch for calls above 21.85. First target being 22.32. Second target being 23.66. Watch for a break below the lows, right? So puts below $20.12. First target being 19.31. Second target, if we trigger that 19.31, 2 down, right? That triggers the weekly. So we know if we trigger the weekly, our target is 18.26. And if we reverse 2 down, right? So we reverse 2 down, we break this 2012, that just proves to the fact that the idea that we were already thinking for puts, right? With this doji on the weekly time frame happening at the end of a bull run. So watch FSR this week. I'm thinking it's cooling off because all these EVs had this run up this past week with the infrastructure bill. So it was just hype. So hype can cool down very quickly. Next on the watch list, we have NIO, looking for calls above $39.10 or puts below 38. I found this using my 2 down 1 on the day scanner. And since I was looking at the daily, I'm looking at this more so for a day trade. I didn't mention that with FSR, but since I found a 2-1 on the daily, and that's the pattern I was looking at specifically, I was looking at it more for a day trade. I just scrolled to the weekly to get a better picture to see if we can have a potential reversal on the weekly. That way a day trade can become a swing. But yeah, NIO. Let's take a look at this bad boy, see what's going down. So off the bat, when I was looking at NIO, I pulled up the month and I noticed something, right? I noticed something. NIO had a huge run up and then just started consolidating, creating a flag. You go to this weekly, you see it, bull run, consolidation, flag. You go to the daily, bull run, consolidation, flag. So usually when you have these bull flags, right, they usually lets me know that, hey, a breakout is imminent. It tells me a breakout is on the way. We just have to watch for a break above certain levels, right? So on the monthly, we have a 3 up, 2 up failed. So price action reached a high, but rejected and came back down. So that's bearish. We got on the weekly, we have a 3 up, 2 up failed, 2 down. That's a bearish reversal. 3 2 up failed, 2 down, bearish reversal. If you don't know what the bearish reversal is, just refer to the cheat sheet in the group. And you see it clear as day, 3 2 up, but it's red, so they let me know it failed. 2 down, bear setup, bearish reversal to the downside. We go to the daily. Well, let's just start with the weekly real quick. So with this weekly, right, we got a 3 2 up failed, 2 down. If we were to get a continuation, right, if price were to continue to reverse down on the weekly time frame, we would need it to break below 37.45 to make a 2 down on the week. If we break that 37.45 level, first target, $35.18. Second target, bottom of the broadening formation, 33.17. And NIO has been lagging behind all the other EVs. Think about most of the EVs this past week, they all ran, right? Except for this one. And so now that all the hype is gone, you know, with all the other ones, we're gonna see if flow comes back into NIO, right? If we go scroll down to this daily, you see this 2-1, right? One's are actionable signals, one's tell us pay attention, something is about to happen. So if we go 2-1 on the daily time frame, it tells us take puts below $38. First target being 37.45. If we hit that 37.45, that triggers the weekly. You know where the next target is on the weekly, 35, right? If we trigger a reversal to the upside, meaning we get a 2-1-2 up, above 39.10. Next target, $40.92, right? All the way up here. If that happens, right, we come up to 42.92. We get closer to breaking. Let me zoom out because it's better on the weekly. We get closer to breaking outside of this little wedge that NIO's creating right now, right? But if you see on this wedge, we still got a little room to go. So I wouldn't be surprised. I wouldn't be surprised at all if in the next week, 2 weeks, NIO continues to trade inside of this range, inside of this $48 to $33 range, right? But we have setups on intraday where we can still make money with NIO. So that's a beautiful thing. Next on the watch list, we have Uber. And we were looking for calls. We're looking for calls above 46.66 or puts below 43.60. I found this using my double inside week scanner. You know, this is one of my favorite patterns, 1 week, one of my favorite patterns. And here's what I saw on Uber. Where is my, I don't like that. All right. Let's see, 1 second. So what I liked about Uber was this 3-1-1 that we saw that I saw on the week, right? Double inside consolidation is just a spell for a potential breakout to come, right? A 1-1 double inside weeks, meaning that we've had 2 weeks where neither bulls or bears could take control of price action. That's not a bad thing. It's not a good thing in my, it's neither. It just tells me, hey, pay attention, watch for this to happen. It gives better entries and it gives clearer to see targets, right? So off back, right, if we were to get calls this week, right, that would be triggered above 46.66, right? With our first target being the high of this one, so 47.65. Second target being right here, 48.74. If we were to trigger puts, meaning we were to go 2 down on the week, that would happen below 43.50. First target being 42.44. Second target being like 42.33. I think, yeah, 42.33. Now, if you notice, yes, we have interest for calls and puts. We're ready either way. The reason I would say, I really wish. I think there's a lot of confusion. Well, on Uber right now. No, that's not what I want. Right. Well, first, let's look at this. You see this gray bar at the bottom, right? So this is here because of something I saw on the daily time frame. I saw a gap. You see right here on Uber, there's a gap that needs to be filled from 42 to 40.24. We know stock market doesn't like gaps. Gaps get filled eventually, right? And with us being very close to that gap with this 3-1-1, I'm thinking we fill this gap down before we run up, right? But if you notice on these time frames, if I zoom out, we're wedging. We're wedging on Uber. Uber's just is trading inside of a range. So that brings more confusion to the fact. Yes, we have set up for puts. We have a setup for calls. We have a gap that needs to be filled down, but we have a imminent breakout. So Uber could really go either way, but either way, we'll be profitable. If we catch these calls or we catch these puts, we'll be profitable on Uber. But I'm watching for this gap to be filled. I am really watching for this gap to be filled, especially since we're so close to that gap, right? Especially since we're extremely close to that gap, right? So again, watch for calls above 43.50 calls above 46.66 or puts below 43.50 on Uber. Next on the watch list, we have AMC. And if you remember, this was on honorable mentions last week. I took it off honorable mentions because I think it's about to be time. Like 10 minutes. I think it's almost time for AMC. That's why I moved it to the watch list versus honorable mentions. I found this using my 2UP1 scanner on the week, and nothing has changed from last week on AMC, right? I look for specific patterns. I like seeing specific patterns, so I trade those patterns religiously. I forever will trade the same patterns because that's how I like to make money. First off, before we even look at what's going on here, right, I want to show you what's happened previously, right? A few months ago, AMC ran up and then ran up with this 3UP, right? Then consolidated, 1-1-1, consolidated, creating a wedge. After it broke out of that wedge and went 2UP, AMC went crazy. Went from $2 all the way up here to 60, right? So you can see the wedge breakout. Now we are in that same predicament again. AMC ran up, it's consolidated for months, and now it's come to a point where it's going to break out. If you scroll to the weekly, you can get a better picture. You can see it a lot clearer. You see the run up, the previous run up, wedge, breakout. Run up, wedge, breakout is imminent. Breakout is imminent. It is coming. A breakout on AMC is coming. Mark my words. We just have to catch it in the right direction, right? We want to be on the right side of the breakout. If somebody tells you straight up off the bat, this is going up, this is going down, this is going up, they bullshit. We don't know what these charts are going to do. All we can do is watch for triggers, set our targets, and then make the trade once our triggers are triggered, right? We come to the week, we have a 2-1 week. Beautiful setup, right? Beautiful setup. This tells us, pay attention, something is about to happen, right? And we've already determined something is about to happen by this wedge. So with this 2-1, we're looking for calls above 44, 43, or puts below 39.66. Since we're looking for this on a weekly, you definitely want to get some time on these contracts if you decide to play them. I'm much more bullish than I am bearish on AMC. Specifically, if you go down to the daily, you'll see why. Go down to the daily. Look at the volume. The buy volume 14 million, sell volume 6. There's a lot more people buying this than there are selling this. So that tells me there are a lot more people that are bullish on this stock than there are bearish, right? And we never want to go against the trend. You don't go against the trend. That's how you get clapped. You follow the trend, right? And the trend right now is telling me bullish. So again, AMC calls above 44, 43, puts below 39.66. Now you can always come down to these smaller time frames and find earlier entries. But if you do that, you definitely want to give yourself some time, right? Make sure you have time on your contracts. Last on the watch list is AEO. And I found this, one second. AEO, we're looking for calls above 27.97 and puts below 26.66. From now on, these last tickers on the watch list, these are going to be earnings plays, right? Potential earnings plays. because I want to start incorporating that more into strategy. So AEO was on the watch list last week, and we were looking for calls and puts above a certain level. I believe we triggered puts, but I found this using my 1-2 up on a week scanner, right? And I'm looking earnings. If you've noticed, earnings for a lot of these companies have been horrible. They haven't hit targets, and they haven't upped their guidance. So after earnings, they're dropping. Stocks have been dropping. So AEO, if you think about what's been going on in the past few months, how has this stock made money, right? These are just some thoughts I'm having. How has American Eagle made money? How have they made their business better? How have they increased production? How have they put out more product to the community? When I think about all these questions, the first answer that comes to mind is they haven't, right? In my mind, I think they haven't. So if I have that idea, I'm going to spend time, right, as you should, spend time looking for this stuff, spend time looking up this stuff. And Twitter is one of the most beneficial websites out there for looking up stocks, right, looking up information on stocks. In my mind, I don't think American Eagle beats earnings. I think American Eagle fails earnings. And since I think they fail earnings, I'm bearish. Since I don't think they've increased production, since I don't think they've put out more products, since I don't think they've made themselves more competitive or competitive in their market, right? I'm thinking bearish. I think they're gonna fail. And if you look, the last earnings they had in which they failed, look what happened. It tanked. It went to the floor. So I'm looking for something similar to happen again. And what's even better is that on this weekly time frame is that we have a setup for puts. So immediately off my mind, when I was looking at earnings for this potential week, and I was like, hey, y'all, I was like, and then all these questions running in my mind, and I was thinking bearish. I pulled up this chart and I saw this 1-2 up, this failed, 2 up failed, or rejection at the highs. Immediately I started thinking, oh, okay, then puts might be right? And the reason why I feel like this is a bearish setup is because 1, it's a 2 up fail, so it rejected the highs. 2, we pull up our cheat sheet and just go off patterns alone, right? And we ask ourselves, what's the next most likely 2? What's the next most likely 2? Just match up what you see on the chart to the patterns. 1, 2 up failed. 1, 2 up. We know it's a 2 up because it crossed above the high of the previous candle. 2 down, right? That's the next most likely 2 down, right? Based off the cheat sheet. If we go 2 down on the week with AEO, if that happens below $26.66, our first target is $25.92. Next target all the way down here at $23.90. And we have earnings on the 23rd. If they fail earnings, if they don't put out, if they don't upgrade guidance, if they don't reach expected EPS, earnings per share, AEO is gonna die. It's gonna fall. So I'm extremely excited about puts on this, but I'm not naive. I always look at the chart on all time frames to see if maybe I'm wrong. Maybe there could be a reversal, right? So I scroll to this daily time frame and I see something that I really don't like, right? I see a gap that needs to be filled. Let me zoom in so you can see it better. Will you see it better now? There's a gap that needs to be filled from 29.92 to 28.37 on the daily time frame, right? So in order for that gap to be filled, AEO is going to need a reversal, and I don't think we're likely to get that reversal, right? If we go to this daily, we have a 3, 2 up failed, 2 down. I've said it before. I've said it on other charts today. This is a bearish reversal. 3, 2 up failed, 2 down. This is a bearish reversal. This is telling me price action is rejecting to the downside. Then look at the volume on the daily. 4 million to the sell side, 211 to the buy. There are more people selling this than there are buying this. This pattern, this 3 to a fail 2 down, is confirmation to the idea of puts. This volume, confirmation to the idea of puts. This 1 2 up failed, confirmation to the idea of puts, right? The chart is telling me puts, but right, that gap, the only thing that's telling me price action could reverse is gap. So I know off the top of my mind, because that exists, I should watch for a potential reversal up, because I don't want to be naive. I don't want to be in puts hoping something goes down while the chart is doing something else. So with AEO, watch for calls above 27.97. Puts below 26.66, and I'm more so leaning toward these puts because I don't think they're gonna beat earnings. So today, tomorrow, Tuesday, I'm gonna be over every stock website I can find to get potential information about American Eagles earnings. And I'll be posting that in the group chat as I find it, because I need more proof to the fact. Yes, I have conviction. I have strong conviction for puts, but I like proof. So I'm gonna look for proof. But yeah, definitely watching for puts there. Next and last on the watch list, we have Dollar Tree. It's an honorable mention. And the reason why I put it as an honorable mention is because, well, you'll see. Dollar Tree has earnings coming up this week too. And I have the same questions with them. The only thing is I don't have answers, and it bothers me. Also, Dollar Tree has been ripping an asshole on people. Just look at Dollar Tree. Green, 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 green. It's to the moon. It's been running. If this beats earnings, you can imagine it's going to keep going if it beats earnings, right? It's going to keep going if it beats earnings. If it fails earnings, just like anything else, it's going to fall. Reason I like Dollar Tree, I'm leaning towards puts again, because we run up a lot. We're at new highs for Dollar Tree. And we have, if you look at the week, we're 1, 2, 3, 4, 5, 6, 7, 8 weeks without a new low, right? Stocks have to cool down. Stocks typically cool down after they've run up for so while. So I'm looking, I'm wondering if this gets a cool down, right? Secondly, there are gaps below that need to be filled, right? That need to be filled. So if we go down to the daily, the gap here starts at 121.41 and it fills at 115.05, right? And then on this daily time frame, what I also like, right, if we have this 3-2 up, right? We have this 3-2 up pattern. This right here, I don't know how it is for y'all, but in my trading experience, these have turned out bearish most of the time. Meaning, most of the time I've seen them, I've seen the third candlestick be a 2 down, right? Where did my cheat sheet go? All right, so 3, 2 up, 2 down. This is the pattern I typically see when I see these 3s and these 2s together. So that's what I'm looking for with Dollar Tree. And then again, I have to find some more information or expectations about earnings, and I'm going to drop that in the chat as I find and collect that information. But I know I have a bearish setup. I have a stock that's run up for weeks without a pullback. I have gaps that need to be filled to the bottom. I have earnings come up in a season where companies have been failing in earnings. They have not been beating. They've been losing people's money, basically. I see a whole lot of bear shit. I see a whole lot of bear setups. So that's what I'm watching for. I'm watching for this to reverse below the 133.21. First target being 1 129.44. Second target, as you can see, if we break that 129.44, next target, you can. It's realistic to put your next target at like 50%. So 50% would be like 126.16, 50% of this candle. I mean, yeah. So 126 area, next target 121.41. And then target after that, gap fill. But more so than the patterns and what we see with these gaps, I'm watching Dollar Tree for earnings. I'm watching to see if it fails earnings, because if it fails earnings, it's put season, put city. But yeah, that completes the watch list. I think we have a great setup all around the board. I think we have the potential to make some money this week. I can't wait to see how some of this stuff unfolds. And again, that completes the watch list. 1 second.